Weekly. It's episode 69, and we're joined here this morning on March the 24th with Joe Bladek. Joe, how are you doing today?
Hey, Sam. Yeah, it's great to be here today and really pumped. Episode 69. We got some great content planned today, and it's spring now, so I'm really excited about that. The weather's been changing. Have you made it outside much? How are you doing, Sam?
Yeah, I've been doing good. Definitely getting out much more. Not yesterday so much. There was a lot of freezing rain in the area. It was a bit of a cold snap, but I think today's supposed to be going up to 9 or 10. So definitely that spring weather is hopefully settling in to stay. We'll see how long it lasts, right?
Absolutely. Yeah, it's good to see the spring weather coming in. Things will start growing and it's turning green a little bit here. The leaves will start coming out, and it's also good to get outside and do some hiking and walking around and enjoying the sun, right?
hmm Yeah, I've
Yeah.
definitely been using the All Trails map more now that we're out of the super snowy weather to try out some new trails in the area. So it's been a lot of fun.
Yeah, definitely that app is a good, very good app to find all the trails. So yeah, that's great. And
Mm.
with the spring weather, always comes new listings springing up around the neighborhoods, right? And we're seeing a lot of that right now with new listings coming up on the market.
Yeah, it feels like almost a surprise that we're seeing houses are actually up for list. There is more inventory. It feels like, we're picking up a bit of momentum over the last few weeks with even some purchases coming in closer to the asking price. Sorry, closer to the listing price. So, it's definitely been warming up in the market as well.
Yeah, absolutely. We're seeing that a lot. So yeah, it's good to kind of talk about that and share that with everyone who's
Mhm.
looking at getting into the market. Maybe they're looking to see what the pulse on the market is, but definitely right now we're seeing a little bit of a change. With that, let's get into our news today, where we talk about the changes and what's happening. And I'll just set that up for us here. There we go. And just with the changes right now, we have seen some changes with the housing market coincide with some changes on the rate side. So let's talk
Mhm.
about that this morning and go into the bond yield first of all and see what's happening there.
Yeah, absolutely. The bond yield has been something that we're tracking. We track each week to give us an idea of, what we can expect from the 5-year fixed rate. And as you can see on the graph, starting from, maybe about 2 weeks ago or so, we saw some very, very steep inclines. You can see that, from September of 2021, it was relatively gradual, but we're now like staying steady almost for the last few weeks now at over 2%, which has been the highest bond yield since 2018.
Can't believe it, actually. Yeah, it's since 2018. I was looking at the graph here. I know we have the smaller view from mortgagedashboard.ca, which is a fantastic website, by the way,
Mhm.
where we get this data. But with that graph, a longer view, like, yeah, it's been a long time since the bond yield has been this high. So, and on that, we have seen a lot of lenders, especially recently and very frequently, being in that mode of raising rates. Sometimes it seems it's daily, sometimes it seems it's hourly.
Yeah, I mean, it seems like that definitely is the trend that we're seeing in a lot of the banks. I feel like we're closer to, we've surpassed where we even were before the pandemic hit. So there's been quite a surge in those 5-year fixed rates.
Yeah, so it's a good time to get your pre-approvals in. Lock that rate in as a rate hold, and make sure you contact Sam or myself or Terry Lynn to get that started. Because as this bond yield's creeping up, we're not seeing it stop anytime soon, Sam, and it could keep going up even further into the remainder of the year, which
Hmm.
would continue to influence fixed rates to continue to climb.
Yeah, absolutely. I think that's definitely something that we can expect, at least for the short term.
Yeah, exactly. There's also another metric we like to follow on Canadian Mortgage Weekly Live here, and that's the CDOR rate. It gives us and our viewers an idea of the variable rate mortgage, where that sits, and what the competitiveness of the variable rate mortgage is in comparison to the fixed rate. Now, Sam, we have seen some changes in the CDOR rate just recently in the last 30, 60 days, but it seems like the variable mortgage is still a competitive option. It's still a logical option to take. The discount is still very significant compared to the fixed rate. And the CDOR rate, even though it has been changing, it's still showing that. Wouldn't you agree?
Yeah, it's definitely when we look at its variance from prime, it has tightened a bit, and it is getting close where we can maybe expect some further increases in the variable, but as of today, it does indicate that it is a good option still, and that is still a competitive option. But again, looking at that, where we were a month ago at February 23rd, we've seen over the last number of weeks now that it's kept a steady increase of about 0.21% per month. Again, indicating, and it could be affected by the fact that prime increased, rates are on the rise in general. But yes, definitely, it's still indicating that variable rate is a good option.
And prime did increase. You're absolutely right. We had that just changed recently at the latest Bank of Canada announcement. So just getting into that, our next announcement is coming up real shortly here, Sam, April 13th. So just weeks away. We here at Canadian Mortgage Weekly Live are getting ready for that pre-rate show. We were just talking about some of our plans, Sam and I, off air, about what we're planning on the next rate announcement. It should be a good one. But just looking at this right now, currently the Bank of Canada overnight rate is at 0.50%, which is the highest it's been in the last 2-3 years. And it's kind of signaling the end of a low rate era. But at the same time, we'll see what happens at the next Bank of Canada announcement. There could be some impacts that are currently happening around the world that could impact the Canadian economy. And the Bank of Canada needs to kind of be sensitive to both the inflationary side of things, but also to the economic impact of all these current forces happening to Canada around the world. I know we're facing a lot of impact right now from the war in Ukraine, and oil prices and how that's going to affect mortgage rates is yet to be determined here. Sam, it's going to be a really interesting meeting on April 13th.
Yeah, it will be. There's always lots to cover at the interest rate announcement because, again, like you're saying, obviously tracking what the overnight rate ends up being, whether they keep it the same or raise it. But it's also interesting to note the monetary policy and sort of what's influencing the decision for the Bank of Canada to make these changes, which, again, if anybody is in a variable rate, this will be an exciting day for you. You get to see, what's going to be happening with your mortgage interest rate, but it definitely helps you, get an idea of sort of what's in process at the Bank of Canada. So yeah, it's going to be an exciting meeting that you don't want to miss.
I'm looking forward to it too. And just as a personal note, I recently renewed a mortgage into a variable rate. So just from personal experience, like I want to be able to take my own advice here. So moving into the next aspect here that we track on Canadian Mortgage Weekly, and that is the national house price. And it's been getting a little bit wild here in the last few months, to say the least, because usually we've seen a nice steady creep of the home prices. But yes, in the last few months, we've seen an exponential growth of sorts. And I think we hit the highest home price average now.
Yes, we are, very, very high. We ended off February with a national house price average of $816,000. So again, another seasonally adjusted year over year of 20% increase from February last year to February of this year. So yeah, it's definitely making it harder for new first-time buyers to get into the market. But it also goes to show, I know that as we were ending February 2021, and it looked like we were seeing, just ending 2021, and it looked like we were seeing a bit of a silver lining from COVID. I know there was, theories and expectations of what the house market was going to do. And I'm not sure if anybody would have guessed that we'd have two back-to-back year-over-year increase months of 20% or more. So it's definitely very interesting to note as we're starting out 2022 to have such high house prices.
It is really interesting to note, and just chatting about this with our current buyers and current sellers, sometimes I'm just finding that even our clients think it's surreal what their home is
Mhm.
worth, or what they are able to sell for, or what they have to buy for on the other end even.
Mhm.
But let's take a look at that. Let's break this down here, because this house price of $816,700, that's nothing to take lightly. We're looking at an annual household income here of $170,000 that is required to be able to afford a home like this if you are a first-time home buyer, putting down the minimum down payment, which would, in this case, including the closing costs, be $70,000 now.
Mhm.
A far increase, a big increase since back in the day when I bought my first home at 5% down as a first-time home buyer.
Mhm.
So it's going to be interesting to see how the housing market reacts to that. But yeah, if anyone is a homeowner right now, there is a lot of equity in your home. And if you are looking to refinance to pay off debt, this will be a great time, because that equity is available at the lowest interest rates comparatively to credit cards or other instruments.
Mhm.
Yeah. So with that, Sam, let's get into our topic today, because there's a lot of good news happening for folks with equity that own homes. There's a lot of good news right now happening for people that are looking for mortgage rates. They're still pretty low. Variable rates are still very good. But what's the good news today that we have to share for folks that have gone through a consumer proposal? And if you have gone through a consumer proposal, you're probably thinking it's going to be hard for you to get credit, and it is going to be challenging. But Sam and I today are going to go over 5 stress-free ways that you can beat your consumer proposal. And Sam, I think we got a good show lined up today.
Yeah, I think this is a really good topic. I think probably the most common thing that we see in clients that, have consumer proposals is just not really knowing how to proceed from there and what the best options are. And then that can actually, I find a lot of people, if they don't know, it tends to kind of slide under the rug. They don't think about it too much. They don't know necessarily how to reestablish themselves. And then that leads for more stressful and difficult conversations farther down the road. So I think we have some awesome points together to really point, people in the direction of some stress-free options, some ways to, tackle it one step at a time, and beat that consumer proposal.
Yeah, great. So getting into the first step here, everyone, because you're probably all very excited to know how to beat that consumer proposal, is simply completing that discharge of the consumer proposal you filed. It may seem like a simple and step to consider, but really, we've seen folks that have not completed their consumer proposal, maybe let their payments lapse, and that can actually really hurt your credit score. So make sure that you actually complete that discharge. That's one of the minimum requirements that the lender will require to be part of that consumer proposal. And make sure you make all your payments on time. Sam, that's really important, I would say, especially after coming out of a consumer proposal. The lender will want to make sure that you have completed that proposal, everything has been paid for, and that you've had good repayment history showing that you've made well on that proposal.
Exactly. I know that we have looked at, some clients and there's still a balance owing, but even if it's something small, $200, I think we've seen a few that are,
Yeah.
even under 200, but if there's a balance there, it's going to need to be paid out. And again, it's not going to be the best situation for, getting your mortgage approved or getting that credit score back up. So making sure that everything is paid off and we're past the discharge date is an easy and achievable step one, but definitely very necessary for any type of loans that we're going to try and offer.
Yes, absolutely. So once you've completed that discharge and you've discharged the consumer proposal, you'll receive a letter from the firm that handled the consumer proposal showing that you've gone through and receive full performance, as they say. But now you're at the point where you can start adding new credit. So that will be the second step. And Sam, you and I help our clients as well with Terry Lynn to help our clients build their credit. It's especially important to start this out as soon as possible. I would say day one, grab yourself a coffee after you've completed your consumer proposal. Call us and we can send you some applications to some either secured credit cards or credit cards that are good for folks that are coming out of a consumer proposal.
Mhm.
And then also do your research online. You can find them there as well. And just start building your credit, because you're going to need to set up accounts to show the banks and lenders and mortgage companies that you are able to make these payments.
Yeah, exactly. This is an important step, because I think a lot of people also maybe have a bit of hesitancy after
Yes,
going through a consumer
you're
proposal.
right.
Like, I'm going to add more credit. I need more credit cards. This seems kind of counterproductive. But again, many of the lenders, even that we work with, will require from the discharge date at least 2 credit lines or credit cards. So the sooner that you can do that, the better off you are to start building that credit and reestablishing credit. Yeah, it seems kind of like a big step for people that just came through a consumer proposal, but adding new credit is going to be the best way to start building some new history of healthy credit on those new cards. So it's definitely a prudent and a fast second step to get into after the discharge.
Precisely, yes. And don't be feeling down if your credit limit initially approved is at $300 or $500 of a credit limit, because these mortgage companies will look at what your credit limit is 1 or 2 years in. And by the time you're 1 or 2 years in with that credit card or credit line, you may have received a few limit increases, and make sure you take those limit increases to show that you're able to service that type of account. But yeah, great tips so far that we have here, Sam. And once you have those credit lines or credit cards, then I'm speaking a little bit in advance here, but then building your credit becomes very necessary. So actually using these accounts and paying them off before the end of the month is really key here. And one way to actually automate the idea of making sure you're making your payments on time, and Sam, we always recommend this as well, is to set up recurring payments to pay off your accounts either weekly or bi-weekly or monthly, or have even your credit card provider withdraw that amount automatically for the credit card. That's sometimes an option as well that we see.
Yeah, exactly. There needs to be you have to actually be using your credit card. Again, it's a big enough step to add those cards, but if they don't see any activity or very, very minimal activity, it's going to slow the process in building that score. So again, even if it's phone bills, something that's auto recurring that you can then have your bank automatically pay that amount off. It's a good way to do it. If you're somebody who's prone to procrastination or a bit slow to the ball, which I know we all can be at times, it's a good way to have that established and have some revolving money on those credit cards.
Great points. So, and moving on to number 4, all great tips here. Make sure you're taking notes of these. Number 4 is monitoring your own credit. So that one, just making sure that you're checking your own score. That actually doesn't affect your score negatively. And there's many free ways to do that. Sam, you may note here, there's ways to do it through mobile banking apps, which I know that a few of my banking apps have that as an option. You go into the menu and it says check your credit score. Also Credit Karma, that's another website. And I know that TransUnion and Equifax, for years, they have allowed you to send in a written request to obtain your score for free. I'm pretty sure they still offer that. It's just you have to go to the, I guess, the expense of putting a stamp and a letter together and actually mailing that form off to them to request your score. But you can also buy it online, I think for $25, and receive that instantly. And that doesn't affect your score. But just monitoring your score and making sure that you're on top of that is going to make sure that you're going to optimize everything, and also making sure that everything's accurate and updated. Because Sam, we've seen that before, right? We've looked at someone who's come out of a consumer proposal, and there could be some accounts that are still showing that they are outstanding, but not included in that consumer proposal.
Exactly. It's important to, again, look at it through Equifax, whether you're spending the $2 in postage to get it for free.
Yeah.
But again, reviewing your credit report from TransUnion or Equifax to confirm that those amounts are correct. Because again, that's another one of those things like your balances after discharge that you don't want to not remember them or forget about them. And then you have all these steps in place, but we find out, in the last hour, oh, there's still things that aren't correct from when you first did it. So the sooner that you can, notice those issues, the sooner that you can make those corrections and submit the corrections is really going to help you off further down the road.
Absolutely. And then number 5, we have starting new and healthy credit habits going forward. This may sound like a really simple and self-explanatory item, but we do need to make note of it, because not everyone will think that that is a requirement after a consumer proposal. So one very important thing is that after a consumer proposal, it's really important that you not miss any payments. Before the consumer proposal, it may have been explained away with a situation, but now ultra important to make sure there's no missed payments. And number 2, keep credit inquiries down. And Sam, we've seen that sometimes. We've seen clients come in and they have credit checks from 10 to 20 different companies.
Yeah, it can really, hurt the file or hurt the credit application when they're seeing multiple different accounts, or companies or lenders that are pulling these credit amounts. And again, that's where, if you're working with a mortgage professional and, you've gone out of it, we can get you pretty accurate numbers without even pulling credit. And we can save that for a last step to get you as much information out front before we actually have to go through with pulling that credit. So that's something that also can sneak up on you, right? If you're looking at different lenders, different companies, and you're seeing all of these multiple credit checks. I know sometimes for clients, they don't even know that it was a hard credit check. And then by that point, they've already had maybe 3 or 4 within a few months, which does communicate, quite negatively to, the lender of the loan.
Exactly. I've seen that too, where a client comes in and they didn't realize that one place checked their credit score 3 or 4 times. Specifically with car loans, they'll go into a car dealership and you'll see all the different banks have been checked and a couple car loan companies have been checked. It's all just for that one car loan. So that can really hurt your score in a short period of time. But yeah, great tips today. So we have 5 stress-free ways to beat your consumer proposal. Just going over them real quick with you, Sam. We have number 1, complete the discharge, get that paid off, make sure your payments are done on time. Number 2, add new credit, talk to Sam, myself, or Terry Lynn to get a new card set up. Make sure you set up 2 accounts if you can, as soon as possible. Number 3, build your credit. Number 4, monitor your credit. You can check it for free or you can check it online, small cost. And then number 5 is start and maintain healthy credit habits. If you have any questions about that process, give Sam or myself a call, send us a private message. A little bit about Sam. He is a mortgage agent living in the Barrie, Ontario area, originally from Ottawa. He's been with the Mega Mortgage team now for just over 2 years now. And it's always good having you on Canadian Mortgage Weekly Live here, Sam. So great to have you here today.
Yeah, thanks so much for having me. I'm happy that we could share this information. It's really important for a lot of clients because it's not 1 in every 100 cases that we work with where there's a consumer proposal, but it's more common than you think. And again, right back at you, Joe. Thanks for joining us and adding insight. You've been in the industry for well over 11 years now, creeping onto that 12-year mark. So living up in Aurelia with your wife and 2 kids. So thank you again for joining us and providing your insight on this topic.
Thank you very much, Sam. And yes, we are getting upon 12 years. So we'll have to celebrate once we hit that 12-year point. But until then, we are going to be celebrating next week with our episode 70. That is 70. We have 70 episodes of Canadian Mortgage Weekly Live next week. Next week, we'll do 11 things that don't affect your credit score. Sam, it's going to be a really good one.
Yeah, it will be.
Yeah. So don't forget to join us here on Canadian Mortgage Weekly Live, Canada's weekly mortgage video news podcast, and see us next week on Thursday, 11:30. Don't forget to follow, like, comment,